All right, greetings, all you devils out there. Happy Friday. Oh, it's about 1:30 for me. It took a little time here to get ready for today. We're going to dive right into look at Bitcoin and the S&P and talk just very, very briefly about the election results and what that means for your portfolio. At least we'll have a discussion about it. But now, before I dive into it, just as a reminder, let me get the promo stuff over real quick. Just a reminder here. Oh, I should have warned you, white screen. This is our promotion. This BloFin's our sponsor. This is currently the promotion we have going on here. This is good through the 23rd of the month, and all sorts of incentives here to get paid out in Solano based on trading volume and deposits. Some of these, it looks higher, like, oh my God, $5 million of trading. Well, if you're using leverage, really not that much. But I don't want to encourage you to be doing trading over your skis or what's appropriate risk just because you're trying to get $500 in Solano. So adjust accordingly. But just a reminder, we're very, very happy with this exchange and the relationship. They're really working well with us. There's not much to not like here. No KYC, no market makers trading against you, very competitive rates. A lot to like here. Plenty of coins, plenty of options, plenty of futures trading, perpetual contracts. Just an all-out great exchange. So if you're looking for any diversification as we go into what's likely to be a crypto bull, at least the continuation of the crypto bull as to when that subsides remains to be seen. Okay, there's my promos all done here. Oh, just one last little thing here. It's kind of cool. This is going on right now. They're doing this huge competition, giving away $1 million in prizes. So again, this is not unlike most exchanges. They all have to do this, right? They're all soliciting for your business. I'm not saying that the BloFin is radically different or better than others. It just happens to be one that we like. And I think that you might find some benefit there, particularly if you're in the U.S. Okay, all of that said, let's get down to it. All right, let's get over to Bitcoin. Now, I'm going to just 30 seconds on the election. Probably no secret that this is not the outcome I was anticipating, not the outcome that I think is going to be better for this country long term, but certainly it's going to be positive in the near term. We shall see how it plays out over the coming years. Certainly we have a risk on. Wow, do we have risk on? So one thing you learn as a trader, I've been doing this as long as I have, is the ability to recognize when you're wrong and then quickly admit it to yourself, admit it to anyone you're perhaps speaking to or counseling, and then adjust accordingly. So I could not have been any more wrong about anticipating this volatility. I'm not going to take that off the screen yet. I'm very glad to see that we're likely to have a very, very peaceful transfer of power, right? That's encouraging. Risk on, Bitcoin friendly administration. My view is here that this was always inevitable. I didn't make any accommodations for a different outcome in the election. I think this is inevitable. That's my opinion. This may be too conservative, but we shall see. But what I actually think is this volatility. Now I'm just going to move it out. We are certainly in the honeymoon period here because we have all the possibilities, all the potential, all the upside, all the risk on, all the good things that are baked into the assumptions we're making about a Trump administration. The reality of it may be different than what we're anticipating now. I'm not saying it will be, but I'm saying certainly a degree of risk what we're doing is, well, certainly never been done before, and we're adding risk to. I don't know where any place that's not going to be at risk now, whether that's well. Yeah, here, let me move on from that, right? That's not why you're here. One thing we learned is that what matters and has always mattered and will always be the driving force of human nature is wealth creation, or just we'd be crude and just say money, right? Money is what matters. Money is what speaks. Money is what bought the well. Let me get off of that. So you trade the market you have. This is certainly, how. The only question is here, if we aren't completing this 5 here as we look at our weekly here, this is 100% the length of the wave 1, and this is 1618, the length of the wave 1 projected from the proposed wave 4, if indeed this is our 4. 100 to 150 roughly here in that range. Can we get there before the end of the year and we get into the Trump era? The second Trump era? I wouldn't take that off the board just yet, but we shall see. Again, right? We're a lot of unknowns coming at us. But one thing we can say for sure is that this is Bitcoin friendly. Now, we're going to look at some of the other cryptocurrencies here. We'll take a spin through some of the majors and just a couple of trades that are setting up in traditional assets here that I think might be worthy of getting on your watch list. So with that, let me pause just for a second here. Okay, so as we look here now, of course, we've broken here the all-time high here as we get on the other side of the value area here. Now, this is a conundrum, right? Is this the right time to be buying? Well, I would never encourage anyone to buy any asset at an all-time high. That's just my view. Well, let me rephrase that. I would never buy this. Right? It's just part of my trading rule set. I would not buy an all-time high because I'm willing to wait for some sort of retrace. You might just come over to the last time we had an all-time high here. Well, the last time relative before this, we're doing it here. What happened last time? So be wary of this, right? We know that there's the liquidity issue here. That's a lot of shorts were squeezed out here. We know we have some of that is fueling the push here. Ideally, we'd like to see some sort of a retrace here as we go down to smaller time frames here. We can maybe start zeroing in on some of those issues, just the POC here. But certainly we can look at this and say, okay, well, if that's our 4 and we're looking here, do we want to be buying in the premium? I'm not saying don't. I'm just saying, maybe not go balls deep there, right? It's just, again, just a reminder, right? Just careful. Right now, different time, different regulatory framework to be in. Okay, we're gonna see. Right, so I wouldn't just fill in the gap and just say, okay, well, it's straight here. Now, I'm not saying it won't be. I'm just saying if you're looking for a place to enter, this would be a high-risk location to do it. Right now, maybe you're comfortable with that risk. If so, have at it. Okay, let's go to 2 counts here that I think, let's do the more, it's probably the easier to grasp here. I've got 2 here. There are probably more than that we could look at here. Let me get the market structure off here just for a second, and we'll just focus on the Elliott count here, see if this can help us. Now, this count here, we've looked at this many times over the last month, 2 months. When we do this, September, last couple of months. Just wrestling with how can we resolve this with the potential for the Bitcoin to be coming off the low with a 3. With working with my team, I do have a solution here that will accommodate this here. As we've looked at this before, this is sort of unconventional that we would truncate the Z wave here of the triple here, WX, Y, X, Z. Certainly unbalanced, but it's a contender, right? In terms of completing the scenario here, solving the puzzle with rules and guidelines here. This is, while unusual, not like it doesn't happen. If that's the case, then we've got a 1, 5 followed by 3, 5 followed by 3. So could we, right? Now, don't despair here. What this would suggest, if we're going to come towards a 5 here, well, if we're going to do this as an impulse here, 5, 3, 5, 3, 5. Well, 1, 2, 3, we might be, it's a 4-hour here. You could make a case here that we're getting a little top heavy here. Now, we don't want to assume the top here. We want to assume that, okay, we've got a contender here for either the 5th or a 1, before a 2, for a 3, 4, 5, and this all goes higher. Remember, we had targets on the weekly of this pushing up anywhere from 100 to 150. So if we consider that range here, just using traditional Elliott measuring metrics here from wave relationships, well, here, just looking at this, right? Well, here's 100. So we would have a pretty good kick ahead of us here, ideally, right? I'm sure it's pretty obvious as to what I'm going to suggest here, that we might look for some of these imbalances here. So if we get any sort of a retrace back into the low 70s, that would be an opportunity to perhaps increase your exposure to Bitcoin, right? Now, this would be, if we're coming up here towards 100, remember the assumption would be we will have completed the impulse, whether you're starting it here or starting it here. Right, because we'll look at a count here. We'd actually look at starting it here. So let me get to that. This is certainly one to have in the mix. We shall see, right? High class problem to be picking through some of these choices. Okay, so with that said, as a contender, my machine's locking up a little bit. Hang on. Okay, got to sort it now. Okay, coming back to this is a solution here that was really the handiwork of one of my Sensei PK, right? Many of you, of course, members will know him well. Those of you that are not in our Discord, not part of our members, you've probably seen some of his videos here as well as on our Twitter feed. And he has his own channel as well. Well, this is an interesting scenario, right? Because I have continued the whole time going, wait a minute. We're going to start the great bull in crypto with a 3. It just rubbed me the wrong way. It's not that it's never happened. It just didn't feel right. Well, so we're back and forth. PK and I looking at this over and over and over again, trying to squeeze a 1 into here. Is this a truncated 5? That was another scenario from another sensei. 1, 2, 3, 4. Oh, we truncated the 5 here, and we're going to go A, B, C. A lot of different ways here. It's just unconventional. Well, this may be one of the more creative ways, and we looked at this on the live stream on Wednesday, that perhaps we've done it this way. A, B, C. There is a 3 here via WXY. D, E. To finish the triangle here, and we have this as our triangle to give us the Y, right? So WXY, we finish the Y with the triangle, right? That's not uncommon. Now, E wave, you might say, well, wait a minute, I thought the E wave is supposed to come down here. Well, E wave, if you study Elliott, you know, is prone to overthrow or underthrow. And so this would not be uncharacteristic of an E wave. You know, is it perfect? No, right? Is Elliott always going to be perfect? No, you shouldn't expect it to be. But this is a very creative solution to solving the puzzle here that gives us a remarkably bullish scenario. If we're starting the 4 here, and I've just drawn this line here, and we're coming out of the triangle and the 4 is here, well, does this fly with regards to what's come after? Well, it's hard to argue with the fact that from this low, I can go into a 5, 3, 5, 3. This is basically just straight up 3 post-election straight up. So one scenario here, and this could be, you can interpret this a little less aggressively with all the 1, 2s, but 1, 2, 1, 2, 1, 2. Right? Every one of those needs a 3, 4, and 5, which means the potential upside here, you know, the bull porn is readily available here. So just much higher. We say it that way. If indeed this is 1, 2, and then we're going to do 1 of 3, and then this is the start of it, incredibly bullish. Right. So just something to keep in mind. You might just take a freeze frame of this, maybe, you know, park some of the, if you don't have it, you probably have your own accounts. Members, I would like to think would. But anyone who's just a regular YouTube sub looking for ideas or maybe another way to frame this or look at it, this would be a very bullish scenario, perfectly valid per rules and guidelines here to give us, you know, again, a very valid count, but very bullish, right? So either one of those are available to us. All of it suggesting, right, when we come back to the weekly, that let's stay focused here through the whole, all of this, right? This is what I always started the videos here saying. I think this is inevitable. The election really was going to have no bearing on where it was going to go. Eventually, it wouldn't have mattered, in my view. Maybe it gets here a little faster. Certainly between now and January 6th, very good. We could be at 100 before the end of the year. It's not out of the realm of possibility. It's really not that much farther, right? Bitcoin can do that in a week. So we shall see. Very good. Anyone who's holding Bitcoin's got to be very pleased, right? Again, while that wasn't the outcome I was rooting for, it's kind of mixed emotions, right? My portfolio went up on 15% overnight, right? So again, mixed emotions. Okay, let me move off of that. I think I've got enough Bitcoin covered there right now. It's just since we've broken a new all-time high here, I think waiting would not be ill-advised, right? Don't FOMO into that. Well, I shouldn't say that, right? Be careful about letting the FOMO get the better of you. Okay, let me take it over to another asset. Okay, I'm over on Solana for the dollar. I've been using crypto as the data source. A couple of my guys when I was struggling to get history said, hey, use crypto, right? You'll lose volume because it aggregates all of them. But I can get a full history here. So if I pull back on Solana, this is probably one of the best looking counts, right? Aside from, I think it's a better looking count than Bitcoin over time. But 1, 2, that 3 could not be any sexier. That's as good as they get. 1, 2, and I think this is a golden zone as well. 1, 2, 3, 4. There's the 3, sideways for the 4. Now it's getting a little tricky here. So the question you got to ask yourself is much like Bitcoin. Are we going up to put in the 5 or somewhere up here, right, at maybe 330? Or are we putting in the 1 of 5? Well, per the price action here, it was not unreasonable to anticipate that we're just putting in the 1 of 5. Right? Again, if, the winners in the space as the architecture is being built out, right? Solana being part in an ecosystem. Well, let me say it this way. Most of us are struggling with the fact that in 2024, as going into 2025, we don't have a substantial amount of use cases for altcoins. Now, some of the smart contracts, in fact, just to make that point, just because I was curious, this is, get over here. This is Perplexity. And I just said, what are the 5 use cases for cryptos today? I literally did this 10 minutes before I started recording. Well, we got peer-to-peer transactions, right? We're familiar with that. Cross-border payments, we're familiar with that. Smart contracts, this is kind of broad-based. This is where Ethereum and Solana, it's coming, right? I don't know. I'm about to sell my house. I don't think I'm going to be using a smart contract, but maybe I could. Right? Store of value. Okay. Well, now we're back to Bitcoin and micropayments. Okay. But that all of this is financially based, right? We aren't to the place where we have use cases outside of the financial space broadly to where the mainstream participants are working. We don't have the killer app yet. We just don't, right? We have the trading. We have all of this potential. We have all the potential to influence. If you look down here, how are smart contracts transforming industries like finance, insurance? Some of that, those will be the first places where we'll start to broaden out. But right now, it's still about trading and meme coins and what moves. And not that you can't make a lot of money there, but we are not at a place to where we have broad-based broad market acceptance here. Well, I've got a couple of here from, oh shit, now I lost my place. Hang on. Oh, where's Solana? There we go. So all of that said, I'm going to circle back to that hot list. Where's the 4? Same problem with Bitcoin. We're going to do this as a triangle, right? Still flies. We're going to do it as the 4 is here. We're going to truncate. Possible. Does it matter? Well, coming off of this low here, I can do a 3, 3, 3, 3. It looks like we're doing a leading diag, an expanding diag into the 1 wave here, the proposed 1 wave. It really wouldn't matter, right? We could do 3, 3, but if we, I like it better here, A, B, C into the 1. It's a little skinny in here. You gotta have to see. Let me zoom in a little bit. A, B, right? We go sideways. C for the 2. A, B, 1, 2, 3, 4, 5, right into the C. A, B, C. Again, the corrections are sharp, right? So we're not getting alternation there, but it's a diag overlap. Here's what, now we're straight up. We don't want an impulse here. The assumption we would make is that this is not done, right? Since that's going to be likely impulsive. So an A, a B, maybe we come down to fill in this imbalance here. I am on an 8-hour here. Into an imbalance, golden zone, the kind of thing you might look for a reaction to come up and complete the C, complete the 5, complete the 1 or 5. One or the other. What a high-class problem. So the opportunity here, heads up, right? If we get a retrace here back into some of this imbalance, right, I think there's probably a good-looking trade right there. Now, you got to be mindful of the fact that while we might have targets up here, if we come up here and complete the 1, you got to be prepared to sit through a 50% retracement, and you got to make a decision. Right? Not that the market is obligated to do that. It's just what it usually does. If we're going to do something like this back into 168, are you comfortable doing that? Would you just maybe take a partial here? Just a suggestion. But many people are like, well, shit, I don't ever want to sell. So I'll just ride it out, add some more here. That's up to your individual risk tolerance and capital allocations and how you like to approach a market going through a drawdown. I mean, the only question would be, okay, if you're booking profits here, capital gains, et cetera, much of that potentially is going to get reviewed and rewritten, and we shall see what comes of that. But right now, just tracking the TNA. People laugh when I say that. The technical analysis, right? I just tease and call it TNA. All right. The TA, 1, 2, 3, 4, we're not likely to finish this here and then start the retracement. So the B for the C would be something to have on your hot list. All right, I've got an alert right here, just on BloFin. Okay, right. So if that's the two, then this has got big legs, still plenty to go, right? If we consider this as an area for entry in the 160 with a potential up here at 400, if we do get something like this, and then we complete it, right? All that does is give you more conviction into the entry here for the upper targets on the idea that I completed a 5 coming out of a long sideways 4. That's a lot of built up energy. You could think of it that way, cause and effect, right? From Wyckoff. If this is a huge, and this is our spring, and then we're going to start here, boom, boom, boom. I know that's a lot of bull porn, right? Which in this right now, the bull porn is. Just let it fly. Okay, let me keep moving. This is a holdover from Wednesday's live stream. It's so good. I took a piece of this. I'm looking to add more. This came from a member. Right? It's always one of the real benefits of our live streams. We get so many ideas from members, traders, people that give us charts. This I can't remember which member gave me this, but it was just spot on. Great TA. We got 2 little entries here. So if we've got the reaction here from the 4, as you see it here, I've just drawn this twice, just zoomed in on a little bit more here. He must be trading this on Binance. Of course, you could trade this on BloFin. All right, so is this our 1 going in? Well, we've left behind this big imbalance, so that's not an unreasonable place to be looking for some sort of follow-up entry. Down here, we got our, what do I got there? Oh, a 21 EMA. Okay, so somewhere between 0.18 and 0.1805, right? So you get this little window here. I think I left my limit orders are sitting right here because I'm not uncomfortable with that stop under the low, right? So that's an easy way to get into the market here. So it might be something like this. Upside pretty substantial. We're going to go up for that upper channel, right? Up for a target here for a 5. Let's pull that back a little bit. What we got there? 25 to 1. All right, giving a stop under the pivot. One to get on your radar, right? You could buy that right now. A little bit of a pullback here. You could start to layer into that as we start to retrace on the assumption we're not going to take out that low, right? That's always the assumption. We take out that low, right? Different ball game. Okay, so that's JASMY. Hang on. Oh, I've got a little subset here of crypto AI. These came from AltFins. That's their top crypto AI, and as we converge between crypto in blockchain, let's say it that way, between blockchain and AI and all the potential here. I was listening to a good video from Mark Moss. Many of you guys probably follow him. He does great work, great research. Highly recommended. If you're not subscribed to his YouTube channel, he's doing a big promo right now, so he's putting out some content. But one of the points that he made is that we're entering into an era. One of the unique features of Bitcoin, well, it's in crypto in general, is that we're now entering an era. What crypto Bitcoin transactions, right, have always been a person, had to start it. Although you didn't have to identify yourself if you're in a non-KYC or something like BloFin, a person has to have an account. But we're now reached the point where you don't have to be a person, right? With a no KYC, AI could create its own account. Interesting. Right. So the convergence here of blockchain and AI is an explosive cocktail of risk appreciation, right? So taking the risk here for if these are going to accelerate the way many are anticipating they will, and that's not from me, that's from, it's hard to ignore the potential. We're still very early, right? As they just looked at, we don't have the killer app. We don't have mainstream adaptation, right? It's only the people that are in the crypto space that are really in here enthusiastically trading this. The average person is not here, right? That's to our advantage. So something like this, is this a particularly attractive Elliott count? Well, the 5 here is not hard to spot. We probably can do this pretty something in here like this. And now through the correction, I've just highlighted here this little consolidation here as an area that we've now completely mitigated. Excuse me. Is that a good looking start? Well, definitely not, right? Another diag? I mean, you could almost squeeze it in. Come here. You could almost squeeze it in here. Is that what we're doing? Right. It's not a great looking start. So this might be one that you wait for this to finish. You know, am I going to get a 3 here? Do I have, it looks like you got an ABC here, ABC here. I'm going vertical here. So some sort of an ABC. Essentially what you're looking at here is all of this consolidation, much like we just looked at, this consolidation potentially leading to new highs. Now, put it into log scale. Oh, I think this is just shy of, oh, pardon me. I don't know why that's just surprised me. The golden zone, one of them, it just went through by a wick. So here we are, 5 up, golden zone consolidation. Is that going to be a 1? Well, if you want to be more conservative and you don't want to jump into injective, you might wait for that to finish. Is this what we get? Something like this? I would be very interested for that potential. If this is going to play as a 1, kind of a sideways 1, you can see all of the price action you might anticipate here. Here's the break of the previous high, liquidity sweep. We come back down here, mitigate this zone here. Now we're going back up. It's low hanging fruit here. These easy pivots here likely to be taken. Something like this. Retrace back into the middle, fill out the imbalance here, up for the 5. If that's the 5, we'll wait for the retrace here. So again, you could jump in now. If you have a 3-year horizon, you look at this and say, well, here I'm buying just it. Well, if we do it this way, let's do it this way. We're buying in the discount. Let's take it out of log scale. Buying in the discount in accumulation. I wouldn't shy away from that. You don't have to go, again, heavy-handed here, but I certainly would want to have a piece of all of it. I do, frankly, right? So again, but don't buy it because I buy it. Buy it because you see the same potential I do. Let's get this back down here. We're buying in the discount of the discount. Let's go to theta. A little bit better, kind of the same idea. We've had all of this consolidation. We don't have a great impulsive launch, but an area of accumulation. Would this be a little rejection block within side of all of this accumulation before the launch? Come back, right? That's the whole idea. We launch, we retrace, come back, rebuild through that consolidation, and that gives us the cause and the effect, right? Potentially, right? We don't know, but that's potentially what's there. Not a great looking Elliott count. Same thing. It looks like a 3 bumpy, right? So this would not be, oh, the Elliott's so perfect. It would be, okay, the price point is reasonable down here. I want a piece of this. If AI is going to be such a part of the crypto evolution, well, I would want a piece of each of these. FET probably looks the best. Here, let's get, here. Oh, now I'm on BloFin. Let me get this over on crypto so I can see. I can get more history here. Oh, where'd you go? There it is. That's what I was looking for. Something I need to say. Impulsive. Let's do it this way. Impulsive. There's the 5, right? So the others that we're looking at here, this is what's not there, right? This clear 5 to retraces into a golden zone. I mean, I can't script that any better, right? I've been teaching that for 6 years, right? Look what it does, right? I mean, these are the footprints of algos, right? So what do they do here? You can see it's the same thing at every pivot, right? They sweep the liquidity that's at that pivot, right? That's an easy pivot. I mean, it's easy, right? And drops right into a golden zone. The next algo fires, and we go right to the 200. That's the 200 Gotti made the average of the EMA and the SMA, which I like. Right? It's a kind of a proxy for the Vegas wave. It'll be right on top of it. So if this is 1 and this is 2, well, let's go to a 4, right? Are we starting on the 1 of 3 or the 1 of the 1 of 3? Looks like, that little double here. This looks very 4-ish. So if we get a little kick, if we get a little kick out of this, right, you probably make the case that this being the 4, we've completed the 1. Maybe we go up here and fill this imbalance. But we'd be looking for the next entry would be standard ops, right? We just pull this back, wait for that opportunity, right? We've got a nice fair value gap here between the 50 and the golden zone. So if you're not in this now, I don't know that I would chase it, but maybe you take a little bit of a push here to get to the 5. if you're comfortable, you can let that retrace. Why though, right? Bank the little single here, and you're looking for that. 1, 2, 3, right? This is 1, 2. This could be one of 3. So again, it's a lot of bull pouring up here. Okay, so we got FET. That's one I would certainly get on your watch list. And we'll finish up with render. Oh, let's see a render here. Again, I'm on BloFin. Right? So you see the issue here, especially when we got to a daily, since they only got to trading view, well, with some of them, it's January, others a little bit later in the year. So I'm going to go to render on crypto. All right, so let's come here, and now we get the full history. Let me pull back a little bit. Looks like, let me go to a daily. Looks like that's a 5. This is a little wacky in here. Well, here it is again, right? We've got that 3 that all of crypto did that was just so confusing for so many going, oh, what? Is this corrective? I don't know that it matters here, but it certainly looks like we complete something here. Here's the retrace 3, 4. It looks like we've got a good completed impulse here despite the rather rocky start. Again, could this be truncation? We're going to have to do this as a diag, perhaps. It's just a bumpy start, no matter how you slice that. I'm down to, we go down to let's go to an 8 here and just take a quick peek here. Is there anything we can glean from that? 1, 2, 3, 4, 1, 2, 3, 4, 5. The finish here, when we come out, once we start, there's all of this consolidation and there's really just chop here, and then it starts, which is not. Crypto will often do this, where the Elliott will appear, just it'll come out of this lack of any tradable pattern we can recognize here, anything that looks like it's an impulsive move. This looks impulsive, but then the correction is so dramatic. So accumulation, expansion, this is the market. That's all it ever does. So 1, 2, 3, 4. This looks very 4-like. The 4 and the 2 out of balance, but I don't, at this point, I think we can assume something is completed here. Now, of course, take it out of log scale and you get a very different look at it, but I think you lean a little bit more into, okay, this likely you've got some sort of a diag to get you into the 1 here. So it cleans that up a little bit when we come out of log scale to go something like that for, oh God, did we get it? All right, so again, we'd have to do it as a diag. A, B, C. A, B, C, 1, 2. All right, so big rip in the 5th, but certainly makes it look pretty straightforward. Is that what we did? Let's put those in yellow, right? There's an A, B, C. Oh, again, that 3-wave start right into a double. Oh, down here, you probably look at this and say, okay, pretty clear rejection block. We've just tapped a little bit of it to mitigate. I mean, I wouldn't be uncomfortable with that, even though we don't have a great looking Elliott count. So again, come back to, okay, if the Elliott's not clear, well, here, let's do this. If the Elliott's not clear, let's lean on the market structure, right? Are we buying in the discount? Well, that's midway. So yes. Is this a good start? I mean, it's not pretty. So this would be more about accumulation for the potential upside. If indeed this is good, we're through the retracement, this is all part of the accumulation. And this could go on for a while. But with the risk on kind of sentiment and the bullish sentiment in the market, this might not be a bad place to take a little piece of it here, and maybe some of this all getting mitigated here as we start to expand here. So 2 choices. One, buy a little now. The other, wait for this. This is likely the next target here. As we've swept this low-lying fruit here, this easy liquidity. So we're going to come out of here as a 1, 2, 3, 4, 5. If so, right, that would be ideal. We wait for the retrace at the 50. Something to keep in mind. Okay, so there's 34. Okay, I'm going to wrap this up. So bear with me one sec. Okay, we're going to finish up with a look at the SPX, the S&P 500 here. Now, I've got a monthly up here. This is actually some handiwork from a member from a live stream, and I liked his work so much I've kept it and been working with it all week. So for our purposes here, I went all the way back. Well, we're going back to 1871, 1877 is the low. So we can get a good 1 here, and then once we get the 2, well, we now have this 100-year channel as noted here that we are just coming up to tap the edge of it. Now, the Elliott here is not ambiguous. 1, 2, 3, 4. Great Recession, 08, 09 recession. There's COVID, and now we've launched up here as we are just coming up to the upper channel of this 100-year channel, perfectly framed by the market. So let's be mindful of the fact that while everybody's bullish, and it seems like between AI and this very pro, let me rephrase that, the reduction in regulation here, which should be friendly to risk assets, and I think we'll just focus on that before we get into the risk parameters here. There's going to be plenty of time to talk about the upcoming risk. But this is hard to argue with. So when we look at this now, going from a monthly to a weekly to a daily, the Elliottician has to be a bit concerned here that we're approaching the 5 of the 5 of the 5, which would now... Again, market is under absolutely no obligation to do this, but we might want to just consider it. Now, we coming down this hard? Well, if that's the case, what could do that? Well, those are disaster scenarios, right? Power grids out, nuclear war, right? I mean, so not to be doom and gloom, but just don't assume that we just go up forever without any significant correction. That's a little scary to make that assumption. So certainly it's party time right now. Between now and the end of the year, let's make as much as we can as we go into the reality of what's coming at us next. Probably a good idea to have some hedges because it could get a little crazy. It may not. Maybe all the warnings are overblown, and what has been discussed will not be happening. I'm not so sure that's how we want to view it. But okay, so with that said, just making the point here, it might be worthwhile to do this for yourself, right? Keep it in your watch list so you've got this long-term. This is a 100-year chart. Let's go from the monthly down to the weekly. So let's do this just incrementally here. Again, this is the work from my member who did this, very nicely done. And he's just taking the length here this is the COVID low up to the pivot before we went through our rate hike cycle. And then we started again as we moved up here, and you'll see we are literally now tapping the upper edge of this. Now, if we're going to do a measured move here, the length of this projected from this low, and it's going to measure, well, interestingly, that hits the exact location for one. These things aren't random. I'm going to have to go back to the monthly here to do that. So bear with me one sec. So if we take the length of the one from this low here in 1877, right, with the length of the one, we project it from the proposed 4. Well, that's exactly 100% the length of the one as we hit parity with the measured move from the COVID low. Now, again, the market's not obligated to stop here. For all I know, we're going to the 2618. But that's a massive assumption to make. So just be mindful that there's risk doesn't come out of the market just because we've got a pro crypto, pro business, anti-regulation government coming into the U.S., right? It'll affect what's about to happen over the next 4 years is going to affect every corner of the planet, right? Okay, so let me go back to that weekly here and just let me finish up here. I don't want to doom and gloom. Okay, so we've got this. So now let me pull this out of here. All right, so now we can focus in here and say, okay, where are we here? Well, what are the potential scenarios? If this is the 3 and this is the Great Recession low, and then we come into the COVID low, and then we push since then, well, we can analyze this. If this is 1, that's a mighty big 1. And this is 2, and this is 3, 4, which at this range, it looks a little bit like, whoa, that 1 is so big. Well, yes, but of course, remember, I'm in log scale. Take it out of log scale. They look a little bit differently, right? So just remember that your eye gets distorted because of the compression of the numbers, of the lower numbers as we compress, as we move higher. So while that distorts to your eye, be sure to check, right? Always, right? You want to check log and arithmetic to make sure you're not seeing something that's just distorted, right? Just creating a new reality for you. Okay, so here's the measure. Here we do this, we duplicate it here from this low. That gives us a target as we just looked at it. What's that target? 7,600, 76 and change. Well, how are we going to get there? If this is 1, 2, 3, 4, and we're going up for the 5, right? Do we know we're going to get there? No. We're going to get there before the end of the year? Probably not. But let's look at the Elliott count here as we start to look at this, because it counts very, very nicely. Oh, let's go to the daily here and see if we can get a count on this, and then I'm going to get out of here. Oh, I think I've got it over here. He did a ton of work here. This is a really, really skilled trader. Very glad to have him in the community. So let me get, bear with me a second here. Oh, where did I put him? Hang on. Got it. It's here in group 1. So on, off. All right. Okay. So we can measure this. Looks like a good 5 here. We get probably a WXY, right? We expand it here as the X. So ABC, ABC, ABC. It wouldn't matter, right? You could do it as a running flat. 3, 3, 5. It doesn't matter. 1, 2, 1, 2. This is a perfect golden. I've shown that so many times, I'll spare you. 1, 2, 1, 2, 3, 4. Looks like a good 3. Right, a completed impulse. There's the correction. Now in the final phases here, as we're coming off this low here, which is the August lows, as we start this cycle here, it looks like we're doing it in a series of 3s. So A, B, C, A, B, C, A, B, C. If I move this over a little bit. A, B, C. Now A. That's what it appears at this moment in time. So thus the idea would be, as we're now starting to, right, the expansion is contracting a little bit. You look at the size of the bars here, again on a daily. If this is going to be A, B, C, we're going to do it this way. That's 2618, the length of the prior pivot. So 2618, we're going to do that? Well, if we are, that puts us up here at 6,100. You've probably seen many of the financial talking heads, right, on Bloomberg or CNBC. The 6,000, 6,200 is a target that's being batted around. Certainly, as we go into the end of the year, that's potential. Now, the real question you have to ask yourself is, okay, well, with all of the expansion and the technology revolution that we're in with regards to AI, and what that's going to do for business, that's certainly going to be radically disruptive. And I don't think people are really ready for that. If you haven't seen Eric Schmidt's discussion about what's coming in the next 5 years, dig around on X, Twitter. I think that might blow your mind a bit. And his premise is that human beings, we're not ready for what's coming in the next 5 years. We're not ready for it. The disruption to the labor force is going to be so dramatic, we are simply not ready for it. It's going to be disruptive to everybody in every way. We are not prepared for it. So that is something to keep in the back of your mind. Again, I encourage you to you probably find it just searching on X, Eric Schmidt. It's within the last 10 days. ABC. Now, if this is the 3, this is the 4, that certainly would be an area that would make sense in terms of just historically how waves relate to one another. But if this is a whole new era of innovation, technology, AI, etc., then the next question would be, okay, are we doing the full top here? Is this the 5 of the 5 of the 5 of the 5? Or is this the 1 of the 5? And all of this remains to come. So we'd be looking at, now we're talking about well over 7,500. So that it would look, of course, anyone who studies Elliott knows where I'm going. Let's get these up here. 1, 2, 3, 4, 5 here. Is that what we're doing? This being the 1, right? A diag into the 1, right? Doing this through a series of 3s. No question we had a rip-roaring impulse here. Correction. Looks like it's going to be a 5, but it looks like it's going to do it in a series of 3s. So 1, 2, 3, 4, what are we going to complete, assuming we get some sort of a pivot up here? This would be the next major opportunity. Again, I don't have the high up here. I'm just using that 2618, something like this. And here for 1, 2, the assumption being that this is an entirely new dynamic. I mean, there's a lot of theory here, but there's plenty of sources to get to that. If you're interested in seeing some of that data, I would encourage you to go to Mark Moss's site. He does some great work on that. It's all fundamentally based, and none of the TA is really, it's not his thing, but I would encourage you to give him a visit, right? He talks about some of these themes that Eric Schmidt's talking about as well, as we go into a whole new revolution of potential. And it's going to be disruptive. There's no question that it's going to affect all of us. Okay, so 1 or 5, how are we going to know? We're not going to know until we start to see some sort of a correction here. But look, as I sit here finishing up this recording, we're not too far from that 100-year channel. All right, guys, that's all I got today. I hope everybody is doing better. With the election behind us, I think that takes a lot of the emotional and a lot of the attention out of, well, just life in general here in the States. So I'm glad to have that behind us. And certainly this is, for any crypto bull, this is going to be potentially, kind of an opportunity we may not see again in our lifetime. Not to overhype it, but it certainly has that potential. Okay, guys, you have a great weekend. I'll see you next week.